if you think about the overall market size of TradFi, right? The fixed income space is the largest asset class of TradFi, right? It's even bigger than the equity space and magnitudes larger than commodities market, right? Imagine the future, right? If we see blockchain as the building infrastructure of the new generation of finance, then we should be able to bring all the TradFi products on chain as well. And imagine a $600 trillion market brought on chain that is more efficient, more decentralized. And that's really the vision that we're trying to build on.
Okay. 안녕하세요, 블록미디어입니다. 오늘은 온체인 금리 시장의 새로운 기준을 만들어가고 있는 트리하우스와 함께할 예정입니다. 탈중앙화 채권 시장과 벤치마크 금리를 어떻게 온체인으로 가져오고 있는지 그 핵심을 트리하우스에게 직접 들어볼 예정입니다. 트리하우스가 그리는 디파이 고정수익 시장의 미래가 궁금하신 분들은 끝까지 함께 들어주시면 감사드리겠습니다. 그러면 지금 바로 시작하겠습니다. Hello, Eddie. How are you doing?
Hey, pretty good. How about yourself?
Yeah, I'm doing well. Well, the market is kind of bad, but I think it will be a go up. So yeah.
Yeah, it's all good. It's not our first rodeo. You know, the bear market is the best time to build, right?
Yeah. We should just do our things, then it will come up. So could you introduce yourself, Eddie, and describe Treehouse in a single sentence?
Yeah, sure. So I think to summarize Treehouse in one sentence, Treehouse is really trying to be the infrastructure that fixed income product in DeFi will sit on. So we actually have two main products. We built the yield engines for native asset of different networks. And we also built benchmark rate that makes fixed income product on chain possible. So me, myself, I'm Eddie. I'm the head of ecosystem and partnership here at Treehouse. And a brief context about my job, I mostly work on growing the ecosystem side of things. I form partnerships and expand the Treehouse product suites across all DeFi participants.
Okay, so you described Treehouse as the fixed income layer for DeFi. So if we compare it to bonds or deposit rates in traditional finance, what role does Treehouse play in this DeFi ecosystem?
Yeah, sure. So I guess in DeFi or in crypto in general, I think a lot of the people are looking at the speculative trading aspect of things. But the fixed income space in TradFi is very different, right? I mean, there's also stocks and commodities where you can do speculative trading, but fixed income as a whole really gives investor a predictable benchmark-driven anchor of returns. And it's really the foundational layer for a lot of the financial system that TradFi is built on. And if you look at the DeFi space nowadays, right, it has largely skipped this layer. So what we see nowadays is that for the same asset on chain, there's a lot of different rates and different yields that you can get. And for essentially the similar product, right, the rates on chain are very fragmented, it's very inconsistent, and there's no really a good reference point for on-chain yield. So Treehouse is trying to build the foundation for that with two distinct pieces within our product suite.
So as you said, Treehouse's core thesis is built around fixed income and interest rates in DeFi. So what's the problem the team identified and why is solving that kind of important in this market?
Yeah, of course. So I think in DeFi specifically, there's no really a benchmark or equivalent of a benchmark rate as to TradFi, right? So there's no LIBOR or SOFR, right? If you go to a bank now that asks for a mortgage, right, there's a reference point that they draw from, right? Each country has their own, but largely this is some form of LIBOR or SOFR or the treasury yield that they reference on. In DeFi, there really isn't something like that. But if you think about the overall market size of TradFi, right? The fixed income space is the largest asset class of TradFi, right? It's even bigger than the equity space and magnitudes larger than commodities market, right? If you look at TradFi, for example, it's a $600 trillion market with all the bonds and notes and structured notes and derivatives that are built on top of it, right? DeFi doesn't really have that. And what we recognize in Treehouse is that this is largely due to the lack of infrastructure within DeFi, right? Without really a reference point, how do people actually build product on top of it? How do you know what is the reference point that you should build your financial product on, right? Do you use Aave? Do you use Lido? Do you use Spark, for example? We don't really know, right? So we want to create an aggregation, essentially, of all the rates out there and provide a single point of reference for all of DeFi to build on. And the way that we see it is that DeFi can't really mature into a real fixed income market without this infrastructure that is built in space. Just imagine the future, right? If we see blockchain as the building infrastructure of the new generation of finance, then we should be able to bring all the TradFi products on chain as well. And imagine a $600 trillion market brought on chain that is more efficient, more decentralized. And that's really the vision that we're trying to build on.
Okay, so right now in DeFi, as you said, the same asset earns like a lot of different rates across platforms. If you use Aave, you can earn another maybe yield. And if you use maybe another platform, you can earn another yield. So people need to go here and go there to like aggregate all the yields. So why is this a problem and how does it hurt the average investor?
Yeah, sure. Like take ETH, for example, right? I think, as I mentioned, there's so many places in DeFi that generates yield, right? Like you can put into Lido for this yield, you can put into Aave for this yield, you can put in Spark more for et cetera, et cetera. Like as an average investor, you don't really know what's the right yield for you. And the fragmentation really exists, right? On the lending side, on the staking side, on the borrowing side, all of it are giving you completely different rates left and right. Every protocol has their own reference points, right? And for everyday investor, for everyday retail investor specifically, this creates a real cost, right? If you are giving your ETH to a protocol that is yielding significantly less, that is essentially opportunity cost for you, right? So you don't, as an everyday investor, retail, you don't really have the visibility into where's the best, safest, risk-adjusted yield that you can actually have. So we are trying to build a more reliable financial product using DeFi venues out there and to give you like an overall experience, right, into the yield generation value and create benchmarks out of it that other protocols can also reference around to unify the fragmentation in the DeFi space.
So could you walk through more about what key assets are using like TETH as the example? So when a user deposits ETH or an LST, so what can they receive and what's happening behind the scenes, including how the interest rate arbitrage strategy works?
Yeah, of course. So right now we have 3 T assets. T assets is kind of the umbrella term that we have for the yield generation vaults, right? So we have TETH, T-AVAX, and T-Hype that is running on Ethereum mainnet, Avalanche, and Hyper EVM respectively. So what's really happening under the hood is when a user deposit ETH or LSD, let's take TETH for example, right, into Treehouse, what they get in return is TETH, and that is the receipt token that represents their positions, right? And behind the scene, what's happening is that the underlying asset that is given to Treehouse is directly staked with an LST partner. Right, we go for the largest LST partner of that network. So for Ethereum, we go with Lido. For Avalanche, we use Banky. And for Hyper EVM, we use Kinetic. Right, and what's happening after that is once we receive the LST back, it goes into an interest rate arbitrage strategy. What that means is we actually use the LST as collateral to go into lending protocols on different networks, right? So on the specific network. So for TETH, I can use WrapStake ETH as collateral to borrow more ETH from Aave at a lower rate than the staking rate itself to essentially arbitrage for that difference, right? And this creates additional yield through what we call a market efficiency yield. In TETH, this example, since it's our biggest vault, this generates around 50-ish bips on an annual basis. And for a user, this is all happening automatically, right? All the yields are accrued in TETH terms through the exchange rate difference. It's a 4626 volts that generates additional yield on top of WrapStake ETH. As a user, this is just happening under the hood. And TETH remains a liquid position throughout. It can be used anywhere in DeFi that is integrated within TETH. using it as collateral or whatever you wish.
So not just by holding T assets to earn yield. So what else can users do by holding TETH across DeFi?
Yeah, so TETH was designed, or rather all T assets are designed as a standard 4626 volt on-chain. So this means that everything is fully composable on-chain, and holding TETH isn't really the end of the journey. It's just a standard starting point, right? So once you have your TETH receipt token, you can deploy it into all the DeFi venues that TETH is integrated on. For example, right, you can go into Aave or Morpho that goes into additional loops if you want. You can borrow stablecoin against it for additional liquidity, or go into stablecoin farms. You can use it to seed LP pools that we have, such as Balancer or Curve, or even yield venues such as Pando, or have an Upshift vault as well. So all of that are the things that you can get with TETH as well. And earning the MEY that I mentioned is just one step of the story. It's really up to the user how they want to use their TETH, and it's effectively the same as holding an LST themselves, but with additional yield due to the interest rate arbitrage strategy that we're running under the hood. And with our new expansions into different networks such as T-Hype, we expect this composability to really expand down the line as well. We will partner with all the protocols with different networks too to expand the ecosystem as a whole.
So beyond the extra yield for individual user and all the DeFi activities, why do you think like converging fragmented interest rates in the DeFi space matter? So do that create a more stable foundation for future fixed income products?
Yeah. So if you think about it, right, every time the arbitrage strategy captures the rate efficiencies, it's essentially closing the gap in between the mispriced market. And over time, this makes DeFi lending rate more consistent and efficient across different platforms, and it solves the fragmentation issue. This matters beyond individual yield because with a market that is converging, a more predictable yield can be priced in the market, and you can actually support different fixed income market to be built on top of it. So you can build swaps, forwards, or even structured products on top of the rates that we're offering now. And this is also something that we're working on with different institutions to enable too.
So as you mentioned about like DOR, like the SOFR or the LIBOR. So now, your second pillar, like DOR, could you explain what it is and what TESR, the Treehouse Ethereum staking rate, your first DOR feed represents?
Yeah, sure. So DOR, or rather we call it DOR, it stands for Decentralized Offer Rate. The name was kind of inspired by LIBOR, the London interbank rate, right? It's really our second pillar of the product. So you should think of it as a benchmark rate infrastructure for DeFi. I think LIBOR or SOFR is probably a good reference from the TradFi space. It's essentially a rate that is built on a decentralized consensus mechanism, that the rates are not set by a single entity. It goes through a transparent, participant-driven process from the panelists that we have. So TESR specifically is our first flagship rate that we have, stands for the Treehouse Ethereum staking rate. What that basically does is we have different panelists that are staking houses, institutions that come to us, and they give us their prediction on what the staking rate might be in the future. Every single day, these panelists actually predict what a staking rate might be in the next 1 day, 7 day, and 30-day tenors. And we aggregate all of these data, take out the outliers, and output a consensus value for what the institutions think the future of staking rate might be into the future. And that is a first step that we can have a DeFi native forward-looking rate that can act as a benchmark that TradFi has had in the past decades, but DeFi has never had, so that we can enable products to be built on top of it.
So I think I understand DOR rates are set through a consensus of participants like panelists, operators, referencers, and delegators. So could you walk through these stakeholders and how does this produce a rate that's trustworthy and resistant to manipulation?
Yeah, sure. So the panelists are essentially the core of the consensus, right? So as of this moment, we only enable panelist registration from blue chip institutions, right? These are your large staking houses like Peer2, for example, right? and they submit rate forecasts on a daily basis of what's the view of the future. And they run, each one of them has a quantitative model of how they predict the rates. And we go through a decentralized mechanism where no one can actually manipulate this number because we trim every single prediction. So if your number is significantly higher or lower than the network average, your number actually doesn't contribute to the consensus. And there's incentive mechanism in place that once the rate actually finalizes into the future, based on how accurate your predictions are, you get rewarded accordingly by the network. It's similar to an Ethereum staking rate, right? And the further that you are, you don't get any rewards or you could potentially get slashed. And that's how we create a censorship-resistant decentralized rate where no one can manipulate it. Imagine there's a market that is referencing this. A staking house can't just say, hey, I think staking rate is going to be 20% tomorrow, and then check up that financial product to some crazy price, because they will be slashed, they won't earn any rewards, and actually their prediction will not be counted into the consensus. So all of that checkpoints or guardrails are actually in place to make sure that the rate is censorship resistant and decentralized in a way that it can be trusted within DeFi for different protocol partners beyond us.
Okay, so once DOR is established, how does it change the broader DeFi ecosystem? Is the vision that other protocols reference this rate in their own products?
Yes, so we've actually already had a few partners that are referencing the TESR rate. And yes, I think largely that's the goal. We're looking for external partners, third-party partners that reference this rate and build other products on top of it. I think some of the ones that I can already share is that we have worked with FalconX to create a TESR referenced staking rate FRA market. So right now we have a bunch of institutions that has already registered interest to trade on this rate. You know, institutions like Marana, Edge, and a few other notable funds, right? This is kind of signaling the early stage of decentralized offer rate DOR adoption, specifically for TESR, that has never been before, right? So now there are people, institutions that can bet on staking rate volatilities. So some people can choose to receive a fixed staking rate, some people can receive floating staking rate, and all by referencing the TESR rate that we provide for them. And I think more recently, we have actually partnered with Euler and KPK for fixed rate ETH borrowable market. And I think this is the exciting part because this is the first time that retail investors, anyone who has access to DeFi, will actually be able to experience a reference rate based product that is referencing TESR. Unlike any other market that's out there that is based on a utilization rate based model, right? The Euler market allows you to borrow ETH at a rate that is fixed by the TESR predictions for 30 days, right? And you don't have to worry about overutilization, which I'm sure a lot of the loopers or borrowers are probably very wary of, right? We as loopers ourselves will understand the risk there. And you know, we're still in the early stage, but we are looking for more partners, more protocols to actually grow this ecosystem altogether.
Also, let's get to another question. So could you walk us through your traction so far about like TVL, user numbers, key investors such as EG Labs, and maybe Marana?
Yeah, sure. So I think TVL right now we're sitting at about 100-ish million. The market has hit the price pretty hard, I suppose, but we're still handling around $100 million worth of TVL within the protocol. In terms of the user base, we have around 100,000 users across different chains. So right now we're on ETH mainnet, Arbitrum, Base, Mantle, Avalanche, and most recently Hyper EVM. Our backers are your blue chip investors, including EasyLab, Lightspeed, Marana, Jump, GSR, Wintermute, all the big boys out there essentially. And together, this basically reflects our institutional backings. We have a lot of these institutional backers. We're going multi-chain with all our product adoption as well.
So I think like also in Korea, the market feels like it's shifting increasingly towards institutions these days. So could you share any examples of like exact mechanics of institutional partnerships on your read on that trend?
Yeah, I think this is definitely market driven. I would say that I echo your view on the institutional adoption, right? That the market is definitely shifting towards institutional participant. We're seeing that directly through all of partners as well, right? So I think FalconX is a very clear example of institutional grade fixed income derivative that is now sitting on top of Treehouse's benchmark framework. Another example that we have is AVEX1, so a publicly traded company digital asset treasury that actually recently went into a pretty significant AVEX position into the TAVEX product for treasury management purposes. And we're seeing a lot of these partnerships and deposit interest from institutions as well. And this is kind of happening with crypto broadly, but going forward, I think as the market condition evolves, we're going to see more growth in both institution and retail alike.
So Korea is a very retail-heavy, exchange-centric market. So what do Treehouse's fixed income products can mean for Korean investors? And how do you plan to approach Korea?
Yeah, so I mean, realistically speaking, Korea is one of the most important markets in crypto, right? But it's very different from many other parts of the world that Korea is a very retail-heavy, exchange-centric market, right? That is kind of sitting there by itself without a lot of the influences from the outside world. I think for Korean investors, we offer something that is slightly different from what a lot of the Korean retail investors are used to, not so much from a speculative trading perspective, but more on a stable benchmark rate anchor yield perspective. So I think this is kind of similar to how you might think of fixed deposit or going to bond investing in traditional finance. And in terms of our relationship with Korea, Tree is already listed on the most major Korean exchanges. And for Korean investors that are interested in, supporting the narrative, they can actually go trade our Tree token on the Korean exchange as well. And we actually see Korea as a very long-term strategic market that we're looking to build products for, specifically for the Korean market as well in the future.
So looking ahead, what else is Treehouse building that you're excited about? Like beyond TETH, TAVEX, you launched T-Hype not long ago. Are there more T asset expansions or DOR developments on the roadmap? So what can you expect next? And how do you see Treehouse continuing to shape the future of DeFi?
Yeah, of course. So TSA expansion is definitely something that we have in mind, right? So beyond TETH and TAVEX, like you just said, we recently just launched T-Hype or Hyperliquid. We are monitoring the strategy very closely as we speak, as it's a still very early stage market. So we expect to keep growing the TSF family, not just to new chains, but to new assets on different chains as well for a safer, more reliable yield that's higher than the native staking yield itself. I think on the door side, TESR is really just the beginning. We're expecting more benchmark rates and more institutional products like the forward rate agreement or the fixed rate market that we've recently been doing. We want more deeper integrations into other DeFi protocols too. I think the long-term vision here is really that the DOR framework will try to make it a standard reference rate infrastructure within DeFi, the same way that SOFR or LIBOR became the standard rate in TradFi, that the entire ecosystem or the whole DeFi can actually build product on top of it, while TSF just continue to expand as a yield-generating venue for all the native assets out there. So I think for users, this means more place to actually deploy your assets, more sophisticated yield-generating venues, and a DeFi market that is increasingly institutionalized, stable, and transparent. And I think for a market like Korea, we want the users to really be a part of the next journey as well, instead of just observing it from a speculative trading point of view.
So for viewers and blog media subscribers who want to learn more or get started, where can they find Treehouse?
Yeah, of course. I think the best place to start is probably our website. So treehouse.finance, that's our official website. We have a lot of documents on TSS, DOR, and everything that we talked about today. They can try out T assets by depositing some of their native asset of the network and start earning the yield. Just head to our dApps page and go directly from there. Everything is permissionless. For daily updates, announcement, etc., they can follow us on Twitter, on X as well, and join our community on Discord. And we want to grow our presence in Korea. So we also want to get more localized content and engagement into the future as well.